As people will know, generally, there's no very generous grant for people who buy a vacant house and want to obviously do it up and live in it. If the house has been vacant for more than 2 years, they qualify, and the maximum they can claim under that is 50,000. If they can get an engineer's report to prove the house is actually derelict as defined by the legislation, they can get up to 70,000. But normally, of course, people who will be purchasing a vacant house that they need to do a lot of work on, or a derelict house that they even need to do more work on, they won't have the money themselves. So they can approach, obviously they'll be looking, in vast majority of cases, they'll be looking for a loan. Now, if they can't get a loan in the commercial sector, from say the banks or mortgage companies, etc., they can have recourse to the local authority, to the council. There is a loan called Local Authority Purchase and Renovation Loan. Now, there are a number of conditions attached to that. The first thing is that you must produce 2 refusals from 2 commercial lenders, such as banks, building societies, etc., just to prove that you can't get the loan in the commercial sector. Secondly, if you're a single person, you can't be earning more than 80,000 per annum. If you're applying jointly with another person, say wife, partner, or whatever, the joint earnings can't exceed 85,000. In addition to that, the house, after it's been renovated, can't be worth at the moment more than 300,000 in Limerick, but that figure is going up to 345,000 next April. So that's generally speaking, the lending authority will look at the household income. They'll look at the net household income after you take out tax, BRSI, etc. What actual income is coming into your pocket. If the mortgage is going to cost you more than 1/3 of that, generally speaking, it won't be forthcoming, because you're not going to be allowed to beggar yourself or to go hungry or whatever in order to just to keep the roof over your head. So 1/3, anything more than 1/3, you're into dangerous territory as regards getting the loan. Now, the interest rate is fixed 4% per annum for it, up to a 25-year loan. And that's fixed for the 25 years. If it's more than 25 years, up to 30 years, it's 4.05%. But again, that figure is fixed, so you know for all time, for the next 25 years, or 30 years, what you're going to be paying. One very important thing to mention is that in order to qualify for this loan, the house must qualify for the vacant property grant in the first place. That's one important thing, the 2 years or the dereliction, whatever. And the other important thing to mention is that you must be renovating the house to live in it. If you look at the vacant property grant, the 50,000, you can get that even if you're proposing to let out the house. But to borrow money from the local authority to do up a house, you must be living in it. It can't be done for rental purposes, and that's a very important consideration that people should keep in mind. You have to be in continuous employment for at least 2 years. If it's a joint application, the other party must be in continuous employment for at least 1 year. And as I've said, you must meet the criteria to qualify for the vacant property grant. Either the house has been vacant for 2 years or more, or the house is certified by a relevantly qualified engineer as derelict. Interesting, there are a number of, in relation to the percentage that you can borrow and the percentage you have to come up with yourself, this is a bit different to the ordinary home loan, home loan where you're purchasing a house just to live in and you don't have to do anything to it. If the property, for the local authority home loan and renovation grant, if the property is a vacant property, let's say it's not a derelict, it's a vacant property, and it only requires minor works, and there's a definition for minor works, then you can claim up to 90% of the ultimate price. That will be the price to value when the renovation is done. And you can also claim up to 90% of the renovation cost. However, if the house qualifies as a vacant for the vacant grant, vacant property grant, and it needs major works, you can still borrow up to 90% of the renovation cost, but you can only borrow up to 85% of the actual price of the property. And if the property is designated derelict, you can only borrow up to 80% of the price of the property, but you can borrow up to 90% of the renovation cost. Now, that they are things that are particular to this particular type of loan. In the old days, it used to be possible, if somebody needed to repair their house, they could go along to the local authority and borrow money at a certain rate of interest and pay it back. The only types of local authority loan now relating to housing are the basic housing loan, where you can't get a loan from a mortgage company or from a building society or from a bank. Provided you fulfill certain conditions, you can get that loan to buy your house from the council. The only other type of loan you can get from the council is where you buy a house that's either derelict or vacant for more than 2 years and you want to do it up. You can get the loan to buy the house and also to do it up. These are there's a question as to whether or not, if the property is actually derelict, whether you can get the local authority loan. That's not quite clear at the moment, but I would be inclined to say that yes, that the loan should cover both derelict and vacant properties. But I just want to put in that slight reservation because it's something that I've come across in my research.